Welcome to another edition of the Real Estate Talk Show. My name is Simon Giannini, and today we've got a very interesting topic. We're going to be talking about syndicated mortgage investments. And, you know, pretty much at all times of the year we get questions around RRSPs and how you can invest your RRSP in the real estate market. Well, you can't just take your money out of the RRSP without incurring a big tax hit and invest it in real estate. It's not allowed under current tax rules. But we've got a legal RRSP-eligible investment class now that can give you fixed returns of 8 to 12%, and that's what we're going to hear. That's what we're here to talk about today. So on the call in a second is going to be a senior person from Fortress Real Capital, and what we're talking about is syndicated mortgage investments. Now, if you're not familiar with Fortress, they've been around since 2002. They got involved in retail, but they've done over $2 billion in 31 active projects, and today we have Graham McWaters, who's got 19 years experience. He's funded over $400 million in mortgages. He's a best-selling author. He's also kind of an amusing guy. Graham, how are you doing?
I'm very well. How are you?
Good, good. I almost sounds like your eulogy, right?
Yeah.
To get you started, yeah.
Yeah. I hope my eulogy's a little longer.
A little longer than that. We've got to be brief, though. We're on a simple webcast here. So we're going to be talking about syndicated mortgage investments, and I'm going to ask you, you're going to take us through some of the sort of the FAQs, and I'm sure there are questions that you get every single day.
Yes. Yeah, so basically the strategy here with Fortress is they deal with large developers who are looking for funding of the soft costs. They'll buy the land and then they'll need money to develop the land. And that's where we come into play. And here are some of the developers that we're currently dealing with. You look at what's been going on in the stock market over the last 10 years. It's moving sideways. People are not gaining in the stock market. Someone who invested 10 years ago, they're sitting with the same amount of money or a little bit more. They're not even keeping up to inflation. So people are looking for an alternative.
And the volatility makes people nervous.
Oh, all the time.
Yeah.
And the fact that our product is RRSP eligible makes it a very attractive product. Basically, we have investors who become lenders, and they form a syndicate. They pick which project they want to go into, and then we put their money at work with these developers. Here's a good summary of what it's all about. So if you were to put more than one person into a mortgage on one project, that's called a syndicate. So we could have anywhere from 50 to 200 people in one project. And collectively, all of these people, this is a very important part about our product, everybody is registered on title in their name, and they have an agreement, a contract with the developer, who is the borrower, and the client is now the investor. And what they do is they use the money, the developer will use the money for items such as marketing, advertising, building the sales center, lawyers, and architects. That's what soft costs are.
Okay, so we're going to walk through step by step. So as I understand it, essentially if you decide, once you get the information on the syndicate mortgage as a type of investment, now just like other investments, you can choose from various investments, correct?
Yeah, you get to choose which project you want to invest in, and shortly I'll show you a couple of our current projects.
Okay, so step one is we look at the projects and we evaluate which one makes sense for us, because there's different terms. There's some are 2 years, some are 3 years, and we're going to get access to all kinds of information on the trends and the pricing, like the comparable sales in the area, et cetera. And if you want to walk us through step 3 and 4.
Okay. Well, actually, this is how we do our analysis to make sure that the project is viable to bring to the investors. And we review the projects. We review the project's budget. We hire external people to do it. Then we get out there and give these projects to the client. So these are the steps that we would do on behalf of the client. But they get to see the budgets. They get to see the appraisals. They get to see all the due diligence that we do. So this is a very important part of it. And then we have the legal structures that are involved, step 4. If you could click on to the next point,
yeah.
Step 4 will pop up.
Mm-hmm.
There are usually 4 different sets of lawyers involved in putting all these deals together, one between the developer and Fortress, one between the client and the developer. There's a lawyer that gets involved that does ILA on behalf of the client, and then there's a lawyer that registers the lien on the property. So it's very transparent. What we're doing, everything is full disclosure and compliant. It's very well structured.
And do you want to explain to our listeners what an ILA is?
Independent legal advice.
Yeah, because I got to imagine looking at this stuff. I mean, how would I know as Joe investor I'm not a sophisticated investor. I've never done syndicated mortgages before. I wouldn't know what to look at in consultants' reports and engineers' reports and so on. So I'm looking for a third-party professional opinion on this stuff. Which makes
well,
sense.
actually, the lawyer will review one of the documents, which is a grand story on like an expanded Cole's notes of the deal, and the Financial Service Commission of Ontario. They have another document that we have to complete on behalf of the client, the lender, and the developer, the borrower, so that everybody knows how much the rate of return is, how long the term of the mortgage is. It's all very well structured. It's not that complicated, actually.
Okay.
Now,
so where do we come in the project timeline here?
Okay, so somebody's going to buy the land, and then they're going to want to develop it. Well, prior to developing it, they have to have it zoned. So we come in right there once the zoning has been done. So we're not getting involved with vacant land that's up in farmland somewhere. We're looking at land in major centers that has already been purchased and has been zoned. Then we get in, so we get in right there after the zoning approvals, and we help them. The money that we lend to the developers helps them go to the next step, which is market launch and pre-sales. So once they start selling it, they're using our money for the sales center, the marketing, the advertising, lawyers, architects, and then they get to a certain stage, and as they go along that step there, you came up with a good point the other day when we were talking, we could have an arrow going from land research and acquisition all the way up to the sun, an arrow from the bottom to the top. The value of this real estate goes up as they start to sell those properties, and that's really important. And once they get to the 75% sold zone, that's when they go for construction financing. We're not in the construction financing world. We're in the middle between the land and the construction financing.
So what's interesting, too, here is if we're involved at the very beginning, right after zoning, and values obviously are going to go up, and we're getting involved in financing before market launch, there could be an opportunity for investors to be investing in the syndicated mortgage. And I have to imagine there could be an opportunity for investors to invest pre-launch as well.
Yes. Yeah, we do have opportunities. We get a certain percentage of these developments we get to sell through professional real estate firms to our clients.
So another potential benefit there.
Oh yeah.
And as I understand, Fortress has projects in major centers, Edmonton, Calgary, Toronto, Barrie, Ottawa, and so on.
Yeah, right across the country.
So people can choose whatever location they think makes sense.
Yes, and for example, Winnipeg is on the map there because guess what? We're coming up with a brand new project any day now. We've got 3 up in the Barrie area, 2 in Ottawa with Brad Lamb. We've got a couple more in Toronto with Brad Lamb. These are some of the major centers that we're in, and you can see why we're in there. Canada is what a great place to invest when it comes to real estate. You know that. I've listened to so many of your shows, and real estate is very, very strong in Canada. What is the asset that's grown the most in your portfolio of all the things you've purchased? It's been real estate. Over 250,000 people are coming to Canada each year, and about 100,000 of them are coming into the GTA, of which 40,000 of them are looking for new housing. There is a demand for real estate. Don't believe everything you read in the newspaper. There is a huge demand for real estate in Canada.
You're preaching to the converted, and I like the fact that we're dealing with the blue chip developers, Empire Group, PDVC, and Lamb Developments, who's an up-and-comer for sure, City Core Developments, and Georgian, and lots of different type of real estate I see commercial, low-rise, commercial, I see high-rise residential, low-rise residential.
Oh yeah, we're mixed. We have a mixed bag. A lot of it's residential, and a lot of it has residential with a little bit of commercial component. That one ADI development there, right in the middle there, where it says the Modern. This is a project where we lent money to them last spring, and they took the money. They built the sales center. They did the marketing, the advertising, the lawyers, the architects, the whole 9 yards. And then in November of last year, they put the 78 condos up for sale in Burlington, and they sold 95% of them in 5 days. And the front page of a major newspaper in the Toronto, in the condo section, huge article highlighting this project, unbelievably successful. Why didn't they sell the other 5%? They're holding them back. They're going to sell them once construction starts, which is just about to start. That's a real nice success story it's a feather in our cap.
Fantastic. Yeah. So here's a sample of a small commercial project that was completed, Dufferin Medical, which is is that in Toronto?
Yes, that is.
Yeah, so I would assume near Dufferin Avenue.
Yeah,
Dufferin
that's
Road.
right. And the Avalon was in Oakville.
Avalon was in Oakville.
There's the annualized rate of returns. That's not too bad, 9.66.
Yeah.
That's better than losing 4% on the stock market.
Yeah, and 16% for the Avalon's not bad either for an 18-month investment. And here's one that's available now, I understand, the residential Bayview.
And then the next one we're going to talk about is the Bayview one.
Yeah.
On the next screen. So Bayview is Bayview and Shepherd. For those of you who are familiar with the Toronto marketplace, this is a prime location, and they're planning to build a 9-story here with 234 units, and it's right across the street from Bayview Village. It's on the subway line is right there, so you couldn't get a better location for somebody who wants to live in that area.
Yeah, and solid developer, Chestnut Hill Developments. They've built over 5,000 homes, so it makes me feel confident as an investor.
Yeah.
And again, you look at each deal individually, and here's a slide showing sort of a typical investment structure. And this one looks to me like a 3-year investment.
Yeah,
do you want to walk us through quickly?
Yeah, this is our, I would say, our one of our typical types of structures where we have a lot of projects that are 3-year terms. So if you invest in a syndicate mortgage, you are in there for a term. It's a mortgage, so this is a 3-year term. Yeah. So if somebody was to put $100,000 into this project, they'd get 8% per year, and it's either paid quarterly or monthly, depending on the project. So if this was paid monthly, for example, they would get 8,000 divided by 12 per year, and at the end of the term, they get their principal back. Remember, they're registered on title. They get, at the end of the term, they get their money back. Then, once the project is completed, they get a profit participation, which is called a deferred lender fee. That's a variable component. So that if they make more profit, then they get more than the 12%. If they make less, they get less. The 8% is a fixed rate of return, and the deferred lender fee is subject to the profitability of the project. So if they sell these units really, really quick and start the construction quick, like the one in Burlington with ADI,
you could actually earn more.
Could probably end up to be a lot more. That's correct.
I think, I have to assume most people are happy with an 8% return, would like more, but would be happy with an 8%, especially inside the RSP. But when we add the lender fee on the back end, if this is sort of a median or average, then it looks to me like almost a 12% annual return.
Yes.
When you add the lender fee, so not a bad return.
Yes.
We've got another project on the go right now, just to give people a taste of what's out there in the Edmonton area, of course, called River Point at Windermere. Yep. And if you want to kind of walk us through what this project is about.
Well, this project is a development with over 170 lots in the Windermere area of Edmonton, right on the main highway there. It's like the Oakville of Edmonton, and over 50 of the lots are already sold. The land is already serviced, and the developer, VIP Developments, has been involved with over 10 developments in the Alberta area. Lots of experience, so you're dealing with someone. That's another thing I didn't mention earlier. We only deal with experienced developers that have a good plan, that have done this before, that have a budget that makes sense. It has to make sense, or we're not going to get involved with them. So this gentleman here, Riaz Chaudhry, has done this before. It's not the first time, and he's got a great location. And in real estate that the location is very important.
Close to downtown on the golf course, and close to highways, et cetera, et cetera. So with River Point, this is a 2-year offering, 8% per year, and a deferred lender fee of approximately 6%.
Yes,
in this case, because it's a shorter term, so you're still getting 3% per year. So if it closes at 6%, you're getting effectively 11% per year return.
That's correct. Yeah.
Plus the return of principal as well.
That's correct. Yeah. And this one, you can see it's paid quarterly. The other one was paid monthly. So each project has different merits, different risk tolerances for different people. Everybody's going to look at these projects with their own taste.
Sure.
So the most important part about dealing with Fortress is you get to add asset allocation into real estate into your portfolio. And it can be, you can pick where you want to go. You get to pick which developer you're going to. So if you say I want to do the next Brad Land project, we'll let you know. And also, everybody is registered on title. That is really, really important. And you're going to get that same return every month or every quarter, and you get your principal back at the end of the term. So that's very important as well. And it's RSP eligible. That's a big, big thing in our business.
So we can invest as little as $25,000. Is there a limit?
No, there's no limit. We've got people putting in, $200, $300, $400, even $500,000 at a time. We usually raise anywhere from $2 million to $30 million on each project, depending on the project. And there's no limit as to how much you can put in. And we do find, I think our average is between $50,000 and $75,000. And some projects, the shorter-term projects tend to go very quick.
Mm-hmm.
Some reason people like to go on the 2 and the 3 year terms. It
Sure.
takes longer to go for the 4s and the 5s, but we have a lot of people that roll it over to at the end of the term. They might say, you know, what's your next project? They'll put it right back into another project, which is
sure. Makes sense. You got a good return on the first deal. It's going to the next one, and again, it's eligible for RSPs. It's eligible for tax-free savings accounts, and you are required, so people understand the legality. You cannot have access to this type of investment through a real estate broker. You need a licensed mortgage agent, and this is why I've got Graham on the call. So that said, you know, if you want more information, and first of all, it was great having you on the call today, Graham. A lot of good information, but there's a lot more that I think people would want to find out. So we've got an upcoming event that's hosted by Fortress on Wednesday, May 29th, 7 to 9 p.m. And if you want to reserve a seat, it's in the 400 and 407 area, convenient location, lots of parking, all of that. There will be some light refreshments, I understand, as well.
Yep.
So to reserve your seat, just call our help desk, 416-979-0333, or send us an email, info@reccanada.com. Tell us you want to come to the Fortress event on May 29th. And if you're watching our webcast beyond May 29th, give us a call for new dates and locations for upcoming info as well. So, Graham, great having you today, and we'll definitely have you back on the show again.
Well, thank you very much, and I really enjoyed talking to you. And I look forward to seeing as many people as possible on May 29th. Thanks
Wonderful.
a lot, Simon.
Thank you so much. Thanks again, Graham.
Okay, cheers.
Yeah. Thanks for tuning in. This has been the Real Estate Talk Show with Simon Giannini. Again, any information about anything real estate, call us, 416-979-0333, or email us at info@reccanada.com. Have an amazing day.